Good afternoon. Hope you're well. My name is Jessica Ramir. I'm a market analyst with Bell Direct. Well, the Aussie share market kicked off the month and quarter with a bang. At noon, we're up about 3.4%, and it comes despite the mixed conditions that we had on overnight markets. US equities ended their last day of the month and quarter in the red. The S&P 500 ended 1.6% lower, while the Nasdaq ended down 0.95%, while European equities pushed ahead. The UK market was up about 2%, the German DAX up 1.2%, the French CAC up 0.4%. While investment managers adjust their portfolios, we saw selling in gold, taking the precious safe haven commodity metal to $1,590 an ounce. Meanwhile, oil gained 2%, also helped by the fact that US President Donald Trump and his Russian counterpart are holding talks, or set to hold talks, to really look to stabilize energy markets. Meantime, oil closed off its worst month and quarter on record. Looking at our markets now, because of the energy lift, our energy sector is up the most, about 9% earlier, followed by property and telcos, along with healthcare. Looking at the leaderboard, Oil Search is out in front in the order of about 18%, helped by the rise of oil, of the commodity price, while also the Japanese fund manager, or a Japanese fund manager, increased their stake in the business. Remembering Japan has closed off their financial year yesterday. Staying on Oil Search, yesterday UBS downgraded Oil Search price target to $2.70, and Macquarie today dropped their price target to $4 for OSH, and that still implies that it is undervalued because it's currently trading at $2.81, but that's if you go by the price target. Looking at another standout stock, Scentre Group, SGC, another standout, up in the order of about 12% earlier, after announcing they secured extra funding to boost their liquidity to $3.2 billion. The market also liked hearing that they've got $2.5 billion of bonds and bank facilities maturing as well for the rest of this calendar year. So the market liked hearing that they've got plenty of cash and assets behind them. Earlier, we also received some better than expected economic news. The Australian manufacturing industry jumped out of contractionary phase for the first time in 4 months, really fueled by stockpiling of these consumer items that we've seen across supermarkets. The manufacturing index, measured by Australian PMI, surged 9.4 points to a reading of 53.7 in March, ending those 4 straight months of contraction. The surge was entirely due to the spike in demand for tinned and packaged food, groceries, toilet paper, cleaning products, and other household essentials. So what does that mean for you? Well, companies to consider benefiting on the back of this thematic could include packaging businesses like Amcor, AMC, pallet business, Brambles, BXB, and you also might like to think about those companies like Ansell, Woolies, Coles, and Metcash. And also think about the logistic property managers like Charter Hall, who collect rent from the likes of Woolworths, Coles, and Metcash, etc. In other news, building approvals for February bolstered ahead, rising almost 20% in seasonally adjusted terms, bouncing back from the fall of over 15% in January. The 20% jump ahead also beat market expectations. The market was only looking for a lift of 4.5%. The rise was largely fueled by a surge in apartment approvals, particularly in Victoria there, as they've come off a low base in January. In terms of more upgrades to be across, well, Bell Potter reiterated the agribusiness Elders ELD as a buy, as cattle prices are up, and so too are cattle volumes. Cattle prices up in the order of 17% year on year, while they also said that soil moisture in the grain belt is the strongest that it's been in about 4 years, while 3-month forward-looking rainfall is equally the strongest it's been for 4 years. So plenty of good news to absorb for that company. Bell Potter also upgraded the building construction services business called Johns Lyng Group, JLG, to a buy. really, as construction is one being listed as an essential service. Johns Lynn also is continuing to respond to an unprecedented amount of jobs and looking at other countries such as UK and New Zealand as a base case. Bell Potter says the company should stand to continue to provide these essential services, and that likely looks to remain unchanged, particularly as it's the leader in emergency responses for repairs and necessary restorations. And lastly, just checking with the Aussie dollar, well, it lost about 0.3% overnight, but it's still holding on to two-week high territory. It's currently at 61.44 US cents. Thank you so much for your company. My name is Jessica Amir from Bell Direct. Stay safe, take care, and happy trading.